Good morning, MMTs. At 6:16 a.m. Pacific Standard Time. We've gathered here in the pre-market futures and how futures are traded and how to take a position going into the opening bell, long and short. Using the MMT platform, they will understand where those delta resistance within the price movement of any opening bell in pre-market futures are called artificial price opening bell gaps. One of the things that we would like to bring clear to you is how you can make those transactions, but you need to know the mechanics of the opening bell, how to trade the opening bell. And we always look at this gap open up list because on that opening bell, they're going to get exhausted. So the gap open up list is very diminishing. The ones that we're going to be focusing on, always Apple price line. We got a Google gap. That thing is ripping. We still have people long this name. It's the same name that we had traded up to $670 in calendar 2011 year. Going in, we had hit a weekly buy signal there, and we traded that up to 670. And then in the first, as soon as it hit 670, of course, I don't care what time of day it was. When it got there, we were selling it short and getting out of the long and selling short. Well, now we're going to go back up in this delta tree, and what we're going to be focusing on is this area around 644 or so, I think so, is going to be a good little wall of resistance there. Now, what we'll be looking at in all of these names is where the upper end of the resistance price channels get exhausted with immediate reversals with the transaction. Once it comes down 3, 5, 17 reversals, you will buy the cover. Sometimes those reversals are 3, 5, 7, $10 depending on the name. Buying off the support level is what we'll be looking at. Apple is coming back. There's a lot of chatter on it. But once again, it is the best intraday trader. We'll be looking at the top end of that resistance. We'll be looking at the 8-3 weekly 590 put, and I'll be giving really wholesale bids out here based on that gap sequence opening bell. 6:19 a.m. Pacific Standard Time. MMT market makers are on standby for making their transactions based on gap opening up bell. One of the stocks that have been beaten down that we're going to continue to feature, and we'll do a separate video, is where this CMG's earnings drop is going to hit the bottom level, where that rock bottom support is, and how this name trades back up to 320. It has been left out of the volatility. Normally when the markets have these gap ups and these great volatility moves, this one is leading the way. Now, after we shorted it very heavily going into the earnings because we knew, just like Buffalo Wild Wings, we knew that they had to come down to where you could find the value. And that's exactly what we're doing. And so we're going to be looking at those 310 calls, these $300 calls on a weekly level. And we'll be doing these individually. But I'm letting my MMTs know 10 minutes before the opening bell that you still want to keep your focus there. Now, as far as this name, ISRG, the one that we shorted, it got whacked and it had to come down during the earnings season. And I would say after this week, 3/4 of the earnings season will be over for July period. We will be doing special, you can go to the economy section and get updated there. There'll be various other places that you'll be able to get updated as to what the banking system is really doing. Ben Bernanke is up this week. You have a monthly jobs report coming out Friday with the 100 days to election. That, so be it. All we are here to focus on is the gap sequence. This one's 494.24 by 508. That's why we like buying this on the bottoms, because you throw your price out here to sell. Let's say you close at 498, he's at 508, you flip the price out there, sell it at 505.82, you would be cutting in front of him and getting that exit. Someone paid on 200 shares $502. Why? Because now they think they're going to get over here on the ask and make that $3 on that offer limit out order within the transaction model. Intuitive Surgical remains on our high priority list. As far as everything being adjusted to an intraday level between the bid, the ask, and the buyers and the sellers. I will conclude our updates, and as the market opens, we will get our price levels upon our entries and our exits, both long the market on one side, of course, and then when those failures happen up at that upper end of those delta prices, that's where that short sell transaction is going to hit, and ka-bing, ka-ching. You get paid twice, and that's what it's about.